And it looks like we are live. I need to send Sam here as well. Let's see, nearly perfect transition. Every time I do this, I get nervous that with the software, there is a timeline, and I sometimes fail to press the right button so that we're both in the frame. Welcome, everyone, to this edition of BizPod.Ninja, formerly known as, which I got to get used to that it's now called CorpDev.Ninja. I did have a rebrand last week. All things corporate development, wisdom and truths from the trenches with leading founders, entrepreneurs, venture capitalists. It's a great honor today, August 28th, 2020. I have Sam Hodges here with me on the show. Hi, Sam. How are you doing?
Doing well, man. Thanks for having me on.
Thank you for making the time. How are you? How's everything? You're joining in from the Bay Area, San Francisco.
Yeah, I am. Sitting in San Francisco today, and trying to stay out of the smoke. Obviously, the last 6 months have been challenge for everybody, and California is not getting a break, unfortunately, over the last week or so.
Yeah, it's been just absolutely. I mean, this year alone, I think people want to cancel 2020, but we still have a few more months left.
Well,
how are you dealing? How are you dealing? How are you and the family? How are you guys dealing with COVID? Just in general.
Look, I really can't complain. My family's, safe and well. And fortunately, the business I'm leading, Vouch, things continue to crank along. I mean, it's really sad to see, obviously, how COVID has, had such a terrible impact all over the world. And, certainly here in the United States, but in my little corner of the universe, everything is more or less going as the way we should. And honestly, biggest concern is monotony, which is why, doing things like this and catching up with friends who I'm not able to see in person as much anymore. It's fun. It's a good way to mix it up.
Excellent. Thank you, Sam. Quick bio on Sam, everyone. Sam Hodges is co-founder and CEO of Vouch Insurance, which serves the needs of high-growth technology companies, backed by $70 million in equity, in private equity and venture capital from Ribbit Capital, Silicon Valley Bank, Combinator, and Index Ventures, among others. Previously, Sam served as co-founder and U.S. managing director for Funding Circle U.S., a leading global lending platform for small businesses, where he helped scale the U.S. operation to over $1.5 billion in total origination volume, serving tens of thousands of small businesses. Before this, Sam played a role in building several other financial technology companies, started his career in management consulting and investing, which is interesting. Pretty much 2/3 of my guests all start their careers in some form of management consulting or investing before becoming entrepreneurs. So I'm finding a common thread here, or maybe I'm self-selecting. He received his MBA and master's from Stanford University and graduated magna cum laude from Brown University, and is a fellow of the inaugural class of the Aspen Institute Finance Leaders Fellowship. What an incredible background, Sam. I know your parents must be proud.
I don't think my parents actually know what I do. When I talk to them, some days it's like they think I'm in private equity. Other days, I think they realize I'm an entrepreneur. I think they figured it out, but it took them a little bit of time.
That's a very similar, that resonates with me, because after I left the standard corporate track 8-9 years ago, my parents are still, they don't even, when they get asked the question, they're like, "Oh, great, how's your son doing?" or "What does your son do?" They actually don't know how to answer that, because mergers and acquisitions, venture capital, all these things that I'm doing, they just, it sounds like we just got.
Well, you're having a good time. You're having a good time. You got the energy. What could be wrong?
Sam, you got a super diverse background. Tell me about your journey into entrepreneurialism. So you went to Stanford, I guess, from Brown University. You went into management consulting first, is that right?
Yep. My parents, academic side, my dad is a research physicist and engineer. My mom was a science writer, in addition to taking care of my sister and me. And honestly, through most of college, I actually thought that I was going to be, an academic. I was planning to go down that path. And it wasn't until, I kind of broadened my horizons a little bit and done a couple of internships that, I realized that, there actually were interesting things to do in the private sector as well. And was lucky to get a good gig, coming out of school where, they invested a lot in training and learned a tremendous amount. And one of the things I learned was
which consulting? Which consulting?
I was a firm called Katzenbach Partners, boutique strategy and organization focused firm in, I guess, 4 or 5 global offices. I was based out of New York. Had a chance to work on on projects and with clients all over the world, which was really cool. I mean, as a 23 or 24-year-old, going and spending time, I was in, Basel, Switzerland for a while. We did some work in Canada, did work all over the U.S. It was just incredible exposure. And although it was really intellectually engaging, one thing I realized pretty quickly is, solving the problems of very large legacy businesses wasn't nearly as much fun as building stuff. And so kind of made the determination pretty quickly that I wanted to do, more on the company building, more on the kind of early stage and growth side of things. And one thing I kind of leave off my resume is actually I worked briefly at a startup after consulting. Although it was funny because actually a month after I joined them, the company was acquired.
Oh,
and
wow.
So
what was the name of that company?
It was called Blue Mobile, or it was at one time called Digicel USA, kind of after the rebrand. It was an MVNO focused on Latinx immigrants in the United States. Really powerful idea, great team. Still in touch with some of the folks I worked with then.
Yeah.
And that was my first taste of being in a startup. It was kind of a wild couple of months, and then able to talk my way into a job at a venture capital and growth equity shop, and kind of the rest is history, I guess, on some levels. And here we are.
Great. No, that's remarkable. And then, I know when we met, I think we met when I think you were at an internship in London. Was it between your year at Stanford or were you working?
No, it was actually when I was working at the that venture capital fund, if memory serves. And I was over, I believe when we met was in London, and this is going to make us feel old. It was probably 14 years ago, ish. And we were one of the businesses we were involved with was based in the UK, and so I was over there for that. And then after that, joined one of our portfolio companies to run business development for them, and then went back to grad school, kind of as a way to get back to the West Coast as much as anything else.
Yeah, remarkable. And so, tell me, after grad school, tell me about the journey with Funding Circle, and maybe you can give a little background on what Funding Circle is to the viewers. But it is a remarkable story. I remember when you launched the U.S. version, and I believe it was a merger with the U.K. Equivalent, and then eventually you guys IPO'd. So can you tell me about that?
Sure. So I guess coming out of grad school, was excited about the prospect of starting a company, and spent a lot of time thinking about problems that felt resonant to me and my co-founder and business partner then. And long story short, had seen kind of firsthand some of the issues around raising debt or getting loans as a small business owner. And on the other hand, both my co-founder and I at that time had worked in more traditional financial services and seen, you can form tens of millions of dollars for very large companies, oftentimes very risky companies. Mm-hmm. But if you're running a small business, and in this case, he had built and I was an investor in a fitness business, we had a really hard time getting a $100,000 loan for that business. And we kind of felt very intuitively there was something pretty badly broken. This is, coming out of the financial crisis, banks had really pulled back. There was just a big gap in the market. And so summer 2011, we started working on a business, which at that point was called Endurance Lending Network. We raised some equity capital, raised some debt capacity, and got the thing going. And long story short, we were out in the market talking about raising our second price financing, when we got into a really good conversation with a group of folks who were doing something very similar in the UK. And so long story short, summer of, I guess it was spring, summer 2013, put those two businesses together and, operated that under the Funding Circle brand. I was then involved for another, I guess, 5.5 years from then. And, at that point, across the US and the UK, I think we were about 80 people if memory serves. So it's still pretty small. Yeah. And by the time I left in 2018, we scaled that up to over 1,000 people globally, 10 billion in cumulative originations, 50,000 small and medium-sized enterprise customers across the US, UK, Germany, Netherlands, and Spain. And it was a pretty wild ride. And you're absolutely right. We ended up taking the company public in 2018. We listed on the London Stock Exchange, and I was at that point I transitioned out of my operating role, but was still involved from a governance and advisory perspective, and so was able to go over for the listing. And it was just an incredible experience. I mean, I hope I am lucky enough to have the chance to do that again with another business I'm involved in building. But it was a pretty amazing milestone.
I'm sure you will be. can you tell me a little bit about the IPO process? How did you guys think about it versus raising another round of capital or getting, I'm sure you had some inbound offers as it relates to M&A and getting acquired. So a lot of founders, when they think about where to take their company, of course, if you're a much later stage company and you have all the right metrics, IPO can be the best option, but M&A can also be sometimes the best option. And sometimes a third option is, neither, just keep on raising and building the company. So how did you guys think about, from a corporate development perspective, as a founder, CEO of Funding Circle U.S., how did you think across these three options?
For sure. So at the time that Funding Circle went public, it had been around in the UK for 8+ years. And from a capitalization perspective, at the holding company level, at that point, we'd raised $373 million in equity capital in the private markets. And we got kind of to this realization, the thinking around this really started kind of late 2016 going into 2017, that it felt like the business really should be set up to run on its own two legs for a long time to come. I think had we wanted to raise more money in the private markets, it probably would have been there. But being in the public markets does give you access to capital in a way that it's sometimes harder in the private markets. And so, long story short, collectively, the folks who were in the executive team at that point in time, we got around a table and decided that was the right way to drive an outcome in the business. And so, as Andreas, I'm sure you are familiar with and have seen, the IPO planning process, almost regardless of where you list, it's a pretty long process, right? There's a lot from a financial controls perspective you need to put in place. From a registration perspective, you need to do a lot on the legal front. You need to make sure that on the kind of team and incentives front, a lot is in place. And you also need to be really thoughtful about how you think about kind of managing investors' expectations. And so it's not something you can do overnight. Although obviously the recent slate of listings and registrations here in the U.S. may suggest otherwise. I'm sure a lot of these companies have been thinking about this for some time.
It's an IPO frenzy right now.
It does appear to be a bit of that.
Yeah. Amazing. And so you have, since then, you put your head back down, you started thinking about a new idea. My understanding is that you were part of a Y Combinator class. Did you incubate? Maybe you can tell me a little bit about what is Vouch Insurance? How did you come up with the idea? Did you incubate it before, or was it partially incubated with Y Combinator? Just tell me a little bit about the company and what you guys are up to.
Yeah, so as I was transitioning out of my role at Funding Circle, and this is back kind of March, April 2018, took some time off. Honestly, I was pretty beat. I was 7.5 years into that journey, and a couple of those years are, startup years can be dog years. So I was pretty tired and had a chance to really just kind of decompress, spend time with my family, my wife and daughter, spend time with my folks, and spent a lot of time thinking about what I wanted to do next. And ultimately really came back to, I love building stuff. And I remain really passionate about how you can use technology to build better financial services and insurance businesses.
Mm-hmm.
These are categories that are massive categories. They're still mostly dominated by incumbent players, and they touch all of our lives. And so, again, was excited to do something entrepreneurial. I'd actually done a lot of work in the insurance space earlier in my career, both on the kind of strategy and kind of go-to-market front, and actually as an investor. Funnily, actually, the very first venture deal I was ever involved with, I was supporting some follow-on financing, and actually the European business I'd mentioned a minute ago was a company called Duck Creek Technologies, which just went public a week ago.
Oh, yes, Duck Creek. So you were involved with Duck Creek before?
I was back when I was at Pequot Capital at the time. I worked with a couple folks who were very involved with getting Duck kind of funded and kind of properly scaling. And so actually spent a ton of time with the leadership team way back then. And so Duck, for those on the podcast who don't know, Duck Creek Technologies is a policy management systems company. They provide technology and services to insurance companies. And so I'd spent time thinking about how you can use technology in the context of building better insurance carriers. And so coming into Vouch, front of mind were really two ideas. And my co-founder and our early backers at Ribbit and at Silicon Valley Bank were kind of those were our anchor partners. We were all really excited about two ideas. The first of which was using technology to build a fundamentally better provider of commercial insurance. Mm-hmm. And the second of those, really going deep on serving the needs of entrepreneurial companies and the people in those businesses. And one of the partnerships that's been really critical for us is our strategic partnership with Silicon Valley Bank. SVB, as you probably know, they've got 50% market share of venture-backed companies. Right. They actually bank 80% of venture capitalists.
They're an amazing channel partner for you guys, for sure.
Well, they saw firsthand the problem that we were speaking to. Yeah. And so, long story short, we all decided to team up and get the business going. We decided to take the company through Y Combinator, and we're very lucky and fortunate to do that. That experience, we were part of the summer 19 batch, was really terrific just in terms of going deep with some of our target users. And I mean, I can't say enough good things about how wonderful the YC community has been. And then, more recently, YC Continuity, which is the growth equity fund associated with Y Combinator, actually led our Series B financing. And so, where we stand today, we provide property and casualty insurance for other high growth technology startups. Mm-hmm. Our programs have been in market now for about a year. We're in 23 states, all across the U.S. Have a team of about 50 people, and have helped now, well into the hundreds of clients get all the business insurance they need to start and then to scale their businesses.
Amazing. And what's down the pike in terms of future growth and fundraising? How do you guys, it's interesting as a founder, what's your philosophy on fundraising? And what would be some advice you'd give others in a kind of a similar growth stage as you? And you've done it before, so.
Well, so I guess my learned experience of this is the right approach for funding really depends on the situation and the type of company you're trying to build. Mm-hmm. Thinking about, what types of businesses should be bootstrapped, what types of businesses, require or are benefited by raising venture capital, how overcapitalized you should be, really comes down to kind of your philosophy of business and how big the opportunity is, and also, frankly, the kind of upfront capital costs of the problem. One thing that is just fundamentally true about insurance is it is a heavy user of the capital and reinsurance markets, kind of by definition. And so having a well-funded platform is actually a real benefit in its own right. And so that kind of explains why we've chosen to raise a good amount of equity capital, perhaps more quickly than you might in another sector, right? If we were building a pure software or services business, I think our funding approach would perhaps be a bit different. Now, on a go-forward basis, we're in a really lucky position, which is we still have the vast majority of the funds we've ever raised. The business has grown really nicely. And so what I think that'll mean is we'll be able to pick our own timing as to when we raise more capital. And then from a growth perspective, the way I'd situate it is, we've had a lot of success serving early stage companies in their earliest moments and also as they scale. And we really think we're just getting going in terms of, serving some of the explicit as well as, frankly, some of the more tacit needs from a risk management and risk transfer perspective in the sector. And so we're having a lot of fun with it.
Amazing. So would it be right or fair comparison what Brex is for startups with credit you guys are for insurance? Is that a fair comparison in a way? Being there from the beginning?
Big differences. There's obviously some important differences between card and banking services and insurance. But in terms of how we think about it philosophically,
right? Yeah,
I do think that that's a good analog, and I've gotten to know the Brex team pretty well over the last couple of years. Have a lot of respect for what they're doing, and I do think there are certain things they've done really well, which we will reflect on as we think about how to build Vouch properly.
What's the main, from a corporate development perspective, what is your main competitive advantage relative to incumbents in your mind as to the core value that Vouch is bringing for companies and startups in the insurance space?
Absolutely. So it's a great question. And I love this kind of question of structural advantage in a particular category. Right. So the way we think about it is in terms of what are the drivers of value in insurance. The first is a differentiated approach from a distribution perspective. And that's where our deep integrated partnership approach really comes in handy. I mentioned and we'll be more excited to announce that. So distribution, where we're really there in the moment of need, when a startup needs business insurance, critically important. Secondly, from a product experience perspective, the digital experience that we're actually offering through to a client, both at time of application, but then over the life cycle of the account, that also is quite different and much more powerful, we think, than the traditional way that most insurance carriers, at least, or brokers for that matter, try to approach this client opportunity. Thirdly, we've actually built new insurance programs. And by that, I mean coverage, forms, an approach to underwriting and rating that obviously, has an ear to what exists in the market today, but that has really been tailored to meet some of the unique needs of high growth technology driven companies. And that includes, frankly, our framework around some of the underwriting differences that come up naturally from the difference between, for example, a digital gaming company on the one hand and a digital health company on the other, which have fundamentally different requirements. And then lastly, we're really trying to take a thoughtful approach to risk management and risk mitigation. And our belief is if we can actually help our clients build better businesses, ones that have fewer issues, fewer errors over time, that's not only good for them, but it's actually very good for us as their insurance backstop. And so it's when you pull those things together that ultimately I think you can do something that again generates a lot of value for the market and hopefully over time really builds a valuable business.
Amazing. And then in terms of the future of the company, in terms of growth, are you mostly, I know you're focused today in terms of U.S. How do you, thinking about your previous company, Funding Circle, that was fairly global, how are you thinking about, expansion? My understanding is that insurance is just so niche and market focused that it's really tough to have a multi-territory or multi-country expansion opportunity. Are you guys thinking about international in the future? Is that even on, in the horizon at some point, or is it just such a different market that it doesn't even make sense to think about?
Well, I'd start by kind of thinking about what our kind of purpose as a business is, and the way we think about that is, our purpose is really in helping entrepreneurs manage their most important risks. And by the way, there are amazing entrepreneurs using technology to transform the way the world works all over the world, right? Silicon Valley remains an important hub for that activity, but it's certainly spread across the U.S. and we've been really focused on making sure we serve other hubs within the U.S. and it also exists globally to a very high degree. Yeah. Now, you're absolutely right that the way insurance is regulated is very geographic specific, and so the business model that may work in the U.S. may have to be different to be successful in continental Europe, for example. But we certainly have the aspiration over time. Once we've gotten real momentum and proved things out here, we would love to be able to serve great entrepreneurs in other geographies as well.
Great, thank you, Sam. We're at the tail end of our show. I always like to ask a few fun questions. It's not only about business on corpdev.ninja. So,
I was joking. We should have had the two cocktails before we started the podcast.
I might start. That might be a ritual, a ritual I have now. But although I do have these shows during the middle and early work hours, so it might be a little weird for me to have.
I'm in insurance. We can pretend we're in Bermuda. It's time for a cocktail.
Oh, it's time for exactly. I may have to implement that for the next one. What are you eating these days? How are you holding up with COVID? Are you cooking at home? Are you using any sort of meal plans, or how are you feeding yourself? This is just I'm such a foodie. I just love to ask people these questions.
Totally, man. Well, I think we share that. So, in terms of what I'm eating, I think that the honest answer is too much. In terms of where I'm getting it, it's mostly home cooked. Cooking is and has for a long time been one of my favorite hobbies and a good way to unwind at the end of the day. So the fact that it's harder to go out to restaurants these days, as much as I want to support my local restaurants, I also enjoy cooking at home pretty frequently.
What's your cuisine of choice, or what are you most dangerous in?
Oh, that's a good question. I'd probably have to go with kind of broadly speaking Mediterranean cuisine, and that's partially just because that's my wife's eating preference, and so she has forced me to develop some skills in the area. I will personally admit that I also love Korean food, and so I've bought probably 5 different Korean cookbooks. There's a great Korean market that's actually about 8 blocks from where I'm sitting right now, and so that's probably one of my other go-tos, although I can't in any way claim mastery over Korean cuisine yet.
Yeah, I'm a huge kimchi fan. I actually have always a bottle of a jar of kimchi always stocked in the fridge for the most part.
Amazing. Good stuff. Good for you. Yeah.
Are you using any apps to stay active, or how are you staying fit or exercising as well? I know that you're an energetic guy.
Again, as I'm eating too much, I'm probably exercising too little. My answer on this one is kind of boring or trite, which is Peloton, right? It is just an amazing fast workout. I love high intensity interval stuff. The Tabata rides are amazing. So that's kind of my go-to a couple times a week. And then actually the woman I used to work with out as my trainer, she's actually been doing virtual sessions. And so we've been doing those as well. And that's just a good way to mix it up a little bit. And I'm just hoping the smoke and fires clear up so we can exercise outside a little bit more.
Great having you on the show, Sam. I loved having you on the show. We've learned a lot here today. A lot of truths from the trenches, a lot of insights from corporate development. Really interesting to hear your track from, consulting and finance to building a super successful startup funding circle to IPO to going back in and building your latest company, Vouch Insurance. And, I'm going to be watching you over the years and expecting another IPO in the future. And hopefully I can get a call before the IPO to invest.
Deal. Well, thanks for having me. I really enjoyed it.
Thank you so much.
We'll see you.
All right, everyone.